tonight. Thank you all for coming to our webinar. This is going to be brought to you by AGL and AirMart, and we are going to go over all about how to buy your first plane. So everything you need to know about aircraft selection, financing, and insurance. So a little bit of overview. AGL offers tailored financing and insurance for every aviation need. We are an experienced team of pilots and aviation enthusiasts, and we can finance anything from a first trainer to a Gulfstream. And then on the AirMart side, so AirMart is an aircraft sales and brokerage company for over 50 years. We are family owned and operated. We have over 200 planes that we sell annually, and we can sell anything from piston to a personal jet. Okay, so our speakers tonight, so we've got Alex Martin. He is on the AGL side. He is our Vice President of Lending. And then on our AirMart side, we have Tate Preece, and he is an AirMart sales executive. So a little bit about just the agenda and the schedule for tonight. So Alex Martin, he'll be up first, and he is going to go over everything about how to finance and insurance for your airplane. And then Tate will take over, and he will go over how to find your airplane. And then we will have a Q&A at the end. So any questions you all have throughout, just put those in the chat, and we will get to all of those at the end. And I will hand it over to Alex.
Awesome. Thank you, Kendall. I am trying to get my screen shared. I think you all can see that. Perfect. So hi, everyone. My name is Alex Martin. I'm a Vice President of Lending with Aircraft Guarantee and Lending. And I'm going to be talking to you all tonight about how to finance your first aircraft. So to kind of kick things off with a little bit of fun, I saw this cartoon recently and I thought it was pretty good, but the spouse is saying to the other spouse, I'm sorry, I probably should have talked to you before I took down our wedding photo and put up a picture of my jet. And I thought this was pretty comical, but in reality, it's also kind of realistic. A lot of folks out there, including myself, have had lifelong dreams of owning an aircraft, and it's something that we really aspire to. And I often joke, maybe if I wasn't in aviation, maybe I'd be married. But all kidding aside, I'm excited to be here and talk to you all tonight about financing. So a little about me. I started flying when I was 14 years old. I was on Microsoft Flight Simulator literally every single day. And it got to the point where my parents said, enough of this. We need to get Alex off the computer. And they got me a flight lesson for my 14th birthday. And little did they know, flight lessons were a bit more expensive than flying on a simulator. But all things considered, I'm really thankful for it. I got my private pilot in high school and got my instrument in college, and I still fly today, mostly as a hobby. My work history and education, I did an aviation management degree over at Florida Institute of Technology in Melbourne, Florida. Got my MBA a little bit after that. Spent some time with Piper Aircraft at their headquarters in Vero Beach, Florida, on the marketing and sales team. I then briefly had a stint over at Lockheed Martin up in DC, got a little too cold, and then promptly moved back to Florida. Or my prior employment, I was there for 8 years at We Florida Financial. They are a credit union based out of Fort Lauderdale, almost $1 billion in assets. And I launched their aircraft lending program and grew it into a pretty sizable product. I was really thankful. I was able to help hundreds and hundreds of people get into personal use aircraft and help finance them to achieve their dreams. So it's a lot of fun. Last year, I began a new position with AGL as their VP of Lending. And it's kind of neat because at my old job, I represented one bank as a direct lender, and now as a broker, I actually have the opportunity to represent, about 9 or 10 different banks. So it's pretty cool. I can finance a lot of different airplanes, a lot of different types of borrowers I just couldn't do at my previous employment. So we'll talk a little bit about the benefits of the brokerage and why you may want to use one down the road. But for most of the presentation, I just kind of want to talk to you about how aircraft loans work, the structures behind them, and the different options. So what I'll start with is going to be financial overview, planning for the loan, the types of loans that are out there for aircraft, eligible collateral and usages that work with aircraft lending, And also, finally, at the end, we'll go through some sample quotes because I know the $1 million question is what are rates like and what are rates going to do? So we'll talk about that a little bit at the end of the presentation. So planning in kind of the human world of planning, airplanes are powered by money, which makes them go forward. The FAA is kind of what pulls us back, and our dreams are what make us fly, and reality is sometimes what brings us down to earth. And talking more in the lending aspect, what that really means is we need money, and we're here to help with that. So let's talk a little about the types of loans that are out there, the operational costs, and then we'll get into the types and usages of the airplanes. So a common question I get when I talk to first-time aircraft borrowers is what do I do first? Do I find my airplane first? Do I get my financing first? Do I get my insurance first? Do I put my deposit down first? It's a very, very common question. And the reality of it is, it kind of depends on where you're at in the purchase process. But if you have a choice and you have some control over it, my recommendation is do the pre-approval first. And the reason being is lending can get very complicated. And every once in a while, we'll have a customer come to us and they'll say, Alex, I found the airplane of my dreams. I put a deposit down on it. And I got my pre-buy done. I'm ready to close, but I need a loan. And maybe they have a recent bankruptcy, or maybe they had a recent separation or some kind of financial hardship. God forbid we can't get them approved. You're potentially at risk of losing your deposit. And that's not a good position to be in. So if you're able to, my recommendation, get your insurance quote up front, get your loan quote up front, and if you like them, go ahead, proceed with the pre-approval. We'll talk a little bit about the pre-approvals in a few slides. Once you have that finished, go out, find the airplane you want. We can help you with that. Tate can help you with that at AirMart. Go ahead, sign your purchase agreement, do your pre-buy, and then you can proceed to closing. So let's talk a little bit about the types of loans that exist. And the reality of it is no matter what your financial situation is, your employment, credit history, usually we can find a fit for you. And a top question I get is also, Alex, I own my own business, I'm self-employed, and I got a really, really good accountant. And my accountant writes off everything, so I don't really show income. I don't have any, W-2 or anything like that. So how am I going to get approved for a loan if I don't show income? And a lot of people don't realize this, but there's actually aircraft loan products available that are no doc loans, meaning the application, the underwriting is all based on what you state your income is and what you state your cash reserves are on the loan application. So they'll take that, they'll do a credit pull, they'll compare the two, and then you can get approved. The nice thing about the no docs loans, if you got a really good accountant, it's a perfect fit. If you got a lot of financials and you're really, really detailed, no docs are also really nice for those situations. It'll save you from collecting, all your tax returns and whatnot. The interest rates on the no-doc loans are actually pretty competitive. I'd say maybe they're a quarter point or so above average. So you're really not paying much of a premium to have that benefit of speed and efficiency and approvals. The second option out there is kind of similar to no-doc loan. It's called an asset-based loan. And most of the asset-based loans, you'll be putting down approximately 40%. And the other nice thing, it's going to be a very, very limited financial package. So again, you probably are not going to have to submit your tax returns or W-2s or pay stubs. And the interest rates on those are actually pretty competitive. They're on par with more of the traditional underwriting. So the final one I'll talk about is going to be the traditional loan, which is best way to describe these things. They're going to be more work than like going into a car dealership, for example, and getting a loan to buy your car. But it's not going to be as much as maybe a mortgage per se, but it's going to be fairly close. The bank is going to collect all your tax returns, all your pay stubs, bank statements, liquidity. They run it through underwriting. They look at debt to incomes, cash flows, cash reserves analyses. And then based on that, they'll generate an approval. And the nice thing about the traditional loans, to be frank, is usually you're going to get the best interest rate. So if you're very sensitive on interest rate, traditional loan is probably going to be your best option. And the other good thing, I'll be honest, generally speaking, a traditional loan, you can still get an approval within maybe 1 or possibly 2 business days. So the turnaround is actually not too lengthy on them. So let's talk a little about the pre-approval. So once you kind of know what loan you kind of want to do, you can go ahead and proceed with pre-approval. If you are doing a traditional loan, of course, AGL will collect all of your financials needed for that particular loan. If you're doing a no doc loan, you just have to fill out the application and do a credit pull. Typical pre-approval time frame takes about a business day to get a decision, generally pretty quick. The pre-approvals are good for usually anywhere between 60 to 90 days. So you got plenty of time to actually go out, find the aircraft you want, do your pre-buy and proceed to closing. If for some reason you do go beyond that 60 or 90-day window, it's really not the end of the world. Most of the time we can get away with just doing another credit pull and we can get the pre-approval reissued for another 60 or 90 days. Now, for some folks, this is not too applicable in today's interest rate market, but obviously a few years ago it was more beneficial. If you do get pre-approved, a lot of the banks do offer a rate lock, meaning that your interest rate is actually locked in for a period of time. So if you're worried about rates going up in the future, that rate lock is often a nice benefit. The other benefit of the pre-approval, it does provide you with some negotiation leverage as well. A lot of sellers will look at that more so as you're financially fit. You got the backing to proceed with the deal and proceed to closing. So it'll actually give you some negotiation leverage. You find the airplane you like, and go say, hey, I got my pre-approval here. I can close right after the pre-buy. As we discussed, it will reduce your risk of lost deposits. And finally, that pre-approval will help your aircraft sales representatives. So if you're working with AirMart, it'll help them find an airplane that fits your needs because they'll know what your budget is. They'll know what you're looking for based on that pre-approval. So it is beneficial for the aircraft shopping as well. One thing I do want to touch on, and Tate's going to talk about this more in detail, but I kind of want to talk around the financing aspect of the operational costs. There are some banks out there that when they run you through underwriting, they want to make sure that not only can you afford the loan for the airplane, but you can also afford to operate the airplane and maintain the airplane. Now, obviously, a real life approach to this is pretty easy. You're going to look at your fuel expense, your maintenance expense for your engine reserves. You're going to look at your hangar expense. You go through all those fixed and variable costs. Tate will touch on that a little bit later. But the banks, they kind of simplify it. They're not going to run a real life approach for every single transaction. So they tend to lean towards one of two approaches. The first, I call it the fixed percentage approach, which is going to be more of an income qualifier for your operational costs. And what they do is if you're buying a piston airplane, they'll take 5% of the purchase price and they'll factor that into your cash flow as a monthly obligation. For turboprops and jets, because those tend to be more expensive, they'll factor that into as a 10%. So an example, if you're buying a $200,000 airplane, that would come out to about 10,000 annually, or approximately 833 per month would be added into your underwriting for your cash flow analysis. Obviously, if the airplane is coming up on an overhaul, the bank may adjust that if they need be, but we can talk about that at the end if anybody has questions on overhauls. The other approach is this is a liquidity approach. And to be honest, this one's a little more common with some of the banks. What they do is they take a look and they say, okay, does the borrower have enough cash to make their down payment? They do, check it off. And then the second thing they look for is does borrower have enough cash left over after the down payment to cover any unforeseen expenses? And kind of what they're trying to figure out is, God forbid the borrower loses their job. Do they have enough cash to cover their current debt obligations plus the airplane for a certain period of time? A good rule is 12 months. So basically, they'll look to see that you have enough cash to cover 12 months worth of debt obligations after the loan closing. So generally speaking, these are all ballpark. Don't take them too seriously and start pulling out your calculators and trying to run numbers on them. That's kind of what we're here for, to help you through those calculations and determine what's a good fit. There are some banks out there, to be honest, that don't include operational costs in their analysis and their approvals. So depending on your situation, we can try to find the best fit. So next up, kind of talking about a little more of the exciting stuff, the actual airplanes. What types of planes can typically be financed? And the reality of it is the answer is pretty easy. Almost anything. Jets, we can do cabin class jets, owner operated jets. Certified pistons and turboprops are very common for us as well. Light sports and experimentals are also pretty popular. And if you're one of those fun folks, we can do a piston warbird, we can do sailplanes, we can do motor gliders, and we can do some vintages too. So generally speaking, almost anything is eligible for financing. I will touch a little bit on what's not eligible. Typically, this is going to be stuff that's not airworthy. A good example, project planes, those can be kind of challenging. Any kind of non-assembled kits can be kind of challenging, or some of the experimentals and the home builds. And the reason for that, especially with a lot of the project planes and the kits, is just because the bank has to put a lien against the collateral. And God forbid the loan goes bad, they don't want to be picking up an airplane that's not assembled or airworthy. So, what I usually recommend to folks who are doing these kind of or purchasing these kind of aircrafts is if you have a second airplane, potentially you can put a loan against that, refinance it, use the equity for your kit or for your project. Or if you want to do a more traditional option like a home equity, you can use that for the project. Now, the cool thing is once the airplane's finished and it's flying and it's airworthy, at that point, typically we can step in, we can put a loan against the aircraft, we can refinance it, and you can pay off your original loan. So, talking a little bit about aircraft usage. Uh, This is important because usage of aircraft is generally going to impact your terms and your rate. So, personal use airplanes, those are the most common, probably bread and butter product for a lot of banks out there. Personal use will typically get you the best interest rate and the best terms. So if you're using the airplane to go out, take your family on vacation or visit some business clients or some job sites, anything like that will qualify as personal use and I'll get you the best rate and terms. Now, leaseback, I want to touch on this in a little more detail. Leaseback, obviously, in this situation, we're referring to people who buy an aircraft and maybe they want to lease it out to a local flight school or a flying club or maybe even a group of friends. And folks will call me up and they'll say, Alex, I'm looking to do a lease back and, I got a flying club or a flight school who wants to pay me, X amount of dollars per hour for the airplane. And I really want to. And the reality of it is, typically on those lease back scenarios, you're actually going to have a smidge higher interest rate and potentially even a slightly more shorter term. And the reason for that is because the bank views it as the collateral is being depreciated. They see it, and I remember this. I know my first flight, my first solos, and my first couple lessons. Some of those landings were kind of hard, and the banks view it as such. They're worried about wear and tear on the collateral. So the customer, the viewpoint from the customer is usually, Alex, I'm making money off the collateral. The bank will like that. I got some extra income and extra cash flow, but the banks unfortunately just don't see it that way. They see it more so as wear and tear. So expect a smidge higher interest rate and it may be potentially a slightly shorter term on those lease backs. So I always tell folks if it's not going to be leased back that often, just put it into personal use loan. It'll probably save you some money on the interest. Thirdly, let's talk about the flight school and charter use. This is better off as a kind of a case by case situation because if the airplane is going to be put into a flight school 100% of the time or put into charter op 100% of the time, those are kind of harder to quote just in general. But what I will say for a lot of the charter operators out there, there's actually some really good rate and terms available for those. And even for flight schools, we sometimes can get some really good rate and terms on those also. Finally, let's talk about the partnerships and ownership structures, because this is something that comes up really, really often to me as well. And what I'm referring to here is let's say you're looking to buy an airplane and you got a good buddy who wants to go in on the airplane with you. It's not an issue, especially if you're personal use, you're going to get the same rates and terms as you would if you're doing it on your own. So don't expect much changes there. But the reason I want to bring it up is because both partners are required to be on the loan. So if it's a 50-50 deal, expect it to be typical that owner A and owner B are going to be borrowers in that loan, meaning they do have to qualify. And the reality of it is that's usually fine for most customers. But I want to mention it because what that means is if for some reason somebody wants to exit the arrangement down the road and they're in a partnership, they're more than likely going to have to refinance that loan to get one of the partners out of the deal. Especially if you have 3 or 4 partners, it becomes even more common. So just understand that if you're doing a partnership, it's really good to make sure everybody's on the same page before you go in and you start doing these arrangements. If you are on the fence about it a little bit, I will say that some of the banks, if a person has less than 20% ownership, you can sometimes get away without having that partner on the loan if they have a minority stake. So if you do have somebody who's not quite sure, they don't think they're going to be using the airplane a lot, potentially a minority stake may be of better interest. So here's kind of the interesting part, the loan quotes. So I'm going to show you guys a few loan quotes, and these are actually real quotes that came up in the last month or so. We'll look at some real interest rates, some real terms, and some real aircraft. Before we do that, though, I just want to go over a few definitions. If you happen to have a background in banking or you've just happened to have done a lot of lending in your life, you may know what these terms are. But if you're a first-time buyer and this is your first aircraft and your first aircraft loan, these might be kind of new terms. And I'll be frank, I didn't learn these terms until I started working in aircraft lending. So I'm going to just kind of go through them with everybody here. So the first thing is a loan amortization. Well, if you pull this up in the dictionary, what you're going to see is the number of months used to calculate your monthly payment. So for a more real life example, if you're on a loan calculator and you're trying to figure out what your monthly payment is, you're probably going to want to plug in that amortization because that's what's going to calculate your actual monthly payment. Now, the loan term, everybody here probably knows what a term is, but I bring it up because a loan term is the number of months you have to pay off the loan, meaning the loan is paid to zero by the end of the term. And a good amount of aircraft loans out there have a different amortization than the term. And that's very important. On the next few examples, you kind of get a visual of it so you can kind of see what that looks like. But what those loans are called is they're called balloon loans. And a balloon loan, or a balloon payment, I should say, is a one-time final payment due at the end of a loan term. So if your amortization is longer than your loan term, obviously your last payment is going to be fairly large. So again, we'll talk about those in a little bit. So some loan terms, some loans do have a balloon payment. Now, the benefit of the balloon is sometimes you can get a better interest rate with it, which is kind of nice. However, if you're a borrower and you plan on having this aircraft for a long time, you don't plan on selling it in 4 to 5 years or upgrading in a few years or paying off early, and you want a fixed term and you don't want to have to worry about the balloon, the products do exist as well. So here's some real life examples. This particular airplane is a Cessna 182 listed with AirMart. At the time I took the screenshot, it was listed for $284,900. Had about a midlife engine on it. And let's say, for example, you're a personal use buyer and you're looking to get into this 182. A typical interest rate would be 7%. It's a good ballpark number to use, so I use it for this example. Now, for some more well-qualified borrowers, we can get you into the sixes. Best available rates right now are around the mid six range. For other borrowers, you might be a smidge over 7%, but if you're just running numbers, 7 is a good one to use. Typical down payment on this type of airplane would be around 15%. Some may be a little less, some may be a little more, but again, good budget, 15%. A standard, and this is pretty much standard across the board, amortization of 20 years for a 182 is normal. And a loan term of 15 years is also going to be normal. So again, what that means is if you keep this airplane for 15 years, you don't sell it or pay off the loan early, you would have a balance due at the end of 15 years that you would need to refinance or pay in full. Loan amount on this transaction would be $242,000, bringing you into a monthly payment of approximately $1,875 per month. So the second example we have is going to be a Cessna 172. And in this one, I wanted to give you all a flight school example to kind of see what the term structures on these look like. These are a little more complicated. In this particular instance, the airplane was listed for approximately $130,000 when I took the screenshot. Now, if the airplane's being used fully commercially for a school, a good ballpark interest rate is going to be around 8.5%. A more competitive rate in today's market might be in the upper sevens, and a lesser competitive rate might be in the upper eights. But for budgeting purposes and example purposes, you can use a rate in the mid eights. Typical down payment on a flight school airplane, 20% is a good bet. We do have some lenders that offer as low as 10%. So there is some flexibility on that if need be. Now, the amortization, this is where it gets really, really flexible with the flight schools. It's going to depend on partly the sales price of the airplane, meaning the value, but it's also can occasionally depend on the usage of the airplane. If it's in a school where it's being flown pretty heavy, you might see a somewhat shorter amortization. If it's a school that's not as busy, potentially you might get a longer amortization. But in this particular airplane being valued in the low 100,000 range, 10 years is a good ballpark. If you're buying a brand new Piper, you might be 20 or 30 years for the amortization. Now, loan term, this is pretty much standard on most flight school airplanes. A 5-year term with a balloon is very typical. So in this instance, a loan will come out to 104,000, bringing in the monthly payment to approximately 1,300 per month. And just to give you an example, if this loan is not paid off before the 5-year balloon, you'd be looking at a balloon payment of approximately 62,000, which again can be refinanced at that point. So finding the airplane, I'm going to be fairly quick on this one, but I just guys want you to know the benefits of using a aircraft broker and a loan broker. If you do the loan through Aircraft Guarantee and Lending, we can run draft valuations for you, and we don't charge anything for those. So if you see an airplane you like on the market, send us a trade plane link, send us a controller link. We can run it through VREF, get you a quick estimate. Is the airplane overpriced, underpriced, etc. We can also check the damage reports online for you. We can review the collateral for you, and we can check some of the logs for if you'd like. And all that is included if you do your loan with Aircraft Guarantee and Lending. We don't charge you for any of that. One of the benefits of doing these things as well is not just knowing it, but it also helps with financing. If you're looking at an aircraft that has some damage history, potentially that may impact the bank's ability to finance the collateral. We generally see that when the damage is more recent. So if it's in the last 5 years, it can get a little harder. But if the damage is aged out and the airplane's been flying for a little while, typically it's not an issue for a bank. At worst case scenario, maybe they'll ask for a little extra down payment. So very, very important on the damage histories. If we can catch those things up front, it'll help you negotiate, and it'll help you, of course, once you put your deposit down. So in closing, and also to talk about closing, closings for aircraft loans are typically done through a reputable aviation escrow agent. And the best way to describe these folks, they're kind of like mortgage title agents, but they do aircraft instead of houses. Majority of them are based out of Oklahoma City, so they have direct access to the FAA, which really helps with the paperwork. And they're going to do all your FAA docs. So they're going to file your FAA bill of sale for you. They're going to file your FAA registration, your title work, the bank lien. They're going to do all those files for you. And the neat thing is everything's done through DocuSign. So you don't have to worry about wet ink signing papers and this and that. In addition, they'll also handle the transfer of funds for closing. So if you want to put your deposit in with the title agent, it's a good idea usually. The loan for the bank will also be routed through the escrow agent. And then on day of closing, once everybody's ready, the escrow agent will ask for everybody's permission. So the seller, the buyer, the bank, anybody else involved, they'll get approval from all parties, and then they will go ahead and proceed with the disbursement of funds, the filing of paperwork with the FAA, and the closing. The other neat thing about the escrow agents, they have the ability to do holdbacks. And the reason I bring this up is because if you're looking for an airplane and maybe you find the perfect airplane you like, but it might need an engine overhaul or it might need some new avionics or a new paint job or a new interior, a lot of times we can actually package in those upgrades with your loan. So the bank can finance a portion of them. And the neat thing is when the loan closes and the aircraft transaction closes, the escrow agent will hold back a portion of those loan proceeds so that they can pay the mechanic directly. So basically, it ensures the mechanic gets paid, it ensures to the bank that the work gets completed, and it ensures the customer that everything is easy and everything is done. So if you're in a situation like that, it can be done. We'll utilize escrow for the holdback, and we can take care of your post-closing upgrades. As well, if you do need any assistance locating an escrow agent or opening that escrow account, of course, we're here for you. So finally, in closing, I want to bring up why use a loan broker, aircraft guarantee, and lending. The reality of it is there's a lot of banks out there who do aircraft loans, but believe it or not, some of them don't advertise. And a handful of them, one of our biggest credit union partners, actually only works with brokered deals. So if you're shopping around calling folks, you may be able to get some of them out there. But the good thing about working with a loan broker is we know all the banks, we know all the contacts. We can figure out what type of loan is going to be a good fit for you, whether it's no doc loan, traditional loan, asset-based loan. And we can get you assigned to the bank that A has the best interest rate for you and B has the highest chance of approval. So we'll save you a lot of effort. We don't charge anything for our services, which is nice. And the other cool thing, to be honest, is a lot of the banks, they actually don't change their interest rate. So if you apply directly through the bank or you apply through a loan broker, oftentimes you are going to get the same interest rate. Banks don't have a large amount of direct volume. You know, as you can picture, you don't see commercials on TVs for aircraft loans. So they get a good amount of volume through their brokers, which is one of the benefit of using one. Finally, and this is the best part about the show, we are going to be out at Sun and Fun next week. So if anybody is going to be in Lakeland, Florida, come out and visit us. That's actually me out there on the right, and that's one of my good buddies on the left from a show a few years ago. So we'd be happy to see you. We'll be at the B Hangar. Come by, say hello, ask us any questions you got. If you're not going to be at the show, my cell phone number is included and my email address is included. You can call at any time. As I said, I love aviation, I love aircraft, and I love banking. So if you want to talk about loans, I'm here. If you want to talk about airplanes, I'm here. Happy to help. And if you do have any questions with the seminar specifically, we'll be taking them at the end after Tate's half. So I'd like to go ahead and hand this over to Tate from AirMart, and he'll be walking you through how to find the right airplane, what to look for, benefits of upgrades, and everything like that. So thank you for everybody's time, and on to Tate.
Hello, everybody, and welcome to the buying portion of the seminar here. So we're going to touch on the big topics. Obviously, we can't cover all of them, but as Alex said, if you have questions, drop them in the chat. We'll try to get to them. If you still have questions after this, feel free to shoot us an email or give us a call. Sales@AirMart is a good email if you guys want to email us. So we'll get into it here. So my name is Tate Preece. I've been at AirMart 6 years. I have been flying for 13 years. I'm also a aircraft owner that I use just personally. So I'm out there in the real world maintaining and flying these aircraft as well. So I'm a multi-engine commercial rated pilot. I fly pretty much everything we sell. So I have a lot of experience with a lot of different makes and models, which I get a lot of questions about because most people do not. So I can provide a lot of insight there. So the first topic we're going to talk about today is defining your mission. So we have an 80-20 rule here at AirMart. So we say buy the airplane that fits your mission 80% of the time. And that is going to be the best way to approach aircraft ownership. Unfortunately, no aircraft is perfect. You're always going to have a mission that the airplane might not be able to do. But 80% of the time is the golden number of what you want the airplane to achieve. So for example, let's say, 80% of the time you're hopping around 2 to 3 people doing 250 nautical mile legs, maybe 500 nautical mile legs. That's kind of a sweet spot for cross country airplanes. So buy the airplane that's going to do that mission the majority of the time versus, let's say you go to Colorado and you go skiing once a year with your 4 buddies, so 5 people in the airplane, 1,000 nautical mile trip out into the mountains in Colorado. Obviously, there's going to be snow in the wintertime. Look at other alternatives, for that trip if that's just a once a year type thing. So that's kind of the 80-20 rule and gives you a little bit of insight on, how to define your mission. I think is the most important part. Write it down, say, how am I going to utilize an airplane? And then that'll help you build a good foundation to look at airplanes that are going to qualify and build on from there on potential fits for your mission. So getting into operating cost, everybody has a different way of calculating it. Kind of the way we do it around here is we break it down into fixed and variable cost. Variable costs are going to be your direct operating cost. So a lot of people want to add up all their costs and say, I'm going to fly 150 hours a year next year. And they'll back their way into a hourly rate based on a hypothetical number of how many hours they flew last year. I don't really believe that's the best way to do it because you're forecasting and it's really hard to predict how many hours you're going to fly per year, specifically if it's your first airplane. So the way that we like to approach it is the fixed cost versus the operating cost. So your fixed costs are what you see on the screen here. So hangar rent, that's going to vary dramatically based on where you are, located in the country. Aircraft annual rates, depending on what airplane you buy, also depending on where you're located at in the country, can be a lot of variance here. So if you need some help, figuring out these costs, call your local airport, see if they have hangars available. Hangars are pretty hard to get these days. Ask them what a hangar would be, ask them what a tie down would be monthly. That's going to give you the exact number. If you know you're kind of looking at a Cessna and there's a good Cessna shop in the area, just call the maintenance shop. And most maintenance shops operate on a flat annual rate. So there's one price for the annual, and then any squawks or maintenance issues that come up in the annual are an additional cost, but at least that lets you know the base price of the annual. So call a local maintenance shop, say, hey, what would you guys charge for a Cessna 182 flat rate annual? And that's going to give you a good idea where that's going to come in cost wise. Insurance, obviously, large variance between pilot experience, where the airplane is located, how you're going to use it, whether it's going to be personal use, leaseback arrangement in a flight school, and also your pilot experience. So Alex touched on this. We have a great relationship with a very good insurance broker. So if you guys need insurance quotes, reach out to Alex or AGL. We can help in that regard as well. And I really encourage people for your first airplane to do that first. Get the financing approval, get the insurance approval. That way there's no surprises, because a lot of times, I have clients that think that they're going to step into, a Cirrus SR-22 or a six-place Bonanza for their first airplane with, very little flight experience. And when they get that insurance quote back, it's sticker shock for them. So don't want to put you in that situation. So definitely, get that knocked out on the front side. Flight training and recurrency, on the insurance note, a lot of times they do require you to have initial training in the aircraft. Typically it's not a huge amount, 10 to 15 hours with an instructor. Once we get into the higher category, high performance pressurized, 6 seats and up category of airplanes, then insurance typically requires recurrent training annually. But for your first airplane, we're probably not going there. So that probably isn't a huge concern, but something to think about in the future, just to factor into your fixed cost. And then you have subscriptions. This includes the nav databases and XM weather. If you're going to go that route, obviously ADSB weather is free, but ADSB weather is, XM weather is superior in my opinion, and well worth the money. So you can look up, cost on those based on how your airplane's equipped avionics wise, pretty easy on Garmin or Avidyne's website. So that just leaves the variable cost or the operating cost. So fuel per hour, easy enough, right? You buy a 182, it's going to burn 14-ish gallons an hour. You can figure out what the average fuel cost at your local airport is. Engine depreciation is pretty straightforward. So, let's say, the TBO on your engine is 2,000 hours and a new engine costs $20,000. That's a low number, but for the sake of simple math, you can do the math there and figure out what the depreciation is going to be per hour. Airframe depreciation is a little bit harder to factor in, but it's also a much smaller number. Most people don't fly enough hours per year to really have that amount to anything. But throw a couple dollars in there. Obviously, the market changes are probably going to affect the depreciation on the airplane more than the actual utilization. Unless, for example, we have a customer down in Florida. He flies his airplane 600 to 650 hours a year. So that's some pretty high utilization. That's all personal use. And, that's a different story at that point. And then maintenance, obviously, if you've been in aviation long enough, you know that things eventually do break and you got to replace them. So there are going to be, unexpected maintenance costs come up outside of the annual inspection. So most people, budget $10 to $30 an hour and just kind of set it aside for, an unexpected maintenance fund just to have it around. So there are potentially, depending on your situation, tax advantages to owning an airplane. So under Section 179, you can depreciate an aircraft. It's around $1 million in the first year. And then there's advantages after that. So we'll see how the tax codes change, if they do change this year. The aircraft has to be used for 51% business. Obviously, business use is kind of a gray area, but you have to be able to justify it. So we encourage everybody to log every trip and its purpose. That way you have documentation. If anything were to ever happen, like you got audited, you can prove that the 51% was legitimate. And of course, we sell airplanes, right? We're not tax advisors or accountants. So I would consult with your local accountant and see if you would qualify and if you could potentially have some business use for the airplane. They've also talked about bringing back bonus depreciation with changes in the tax code. So if that happens, you'll see a lot of changes with aviation because you can depreciate a lot more than just the $1 million in the first year. We also think that that's going to give the market a pretty good boost if that is going to go into the tax code. We're kind of coming off bonus depreciation the last couple of years, but there were a lot of years there where a lot of small business owners, also large businesses, going into the end of Q3, Q4, they were buying airplanes for the tax advantages because they were writing them off. So something to keep in mind if you're looking for an airplane later in the year, you might want to keep an eye on the tax codes there. So we'll talk about engine airframe times and what's really important. A lot of people get tied up on the engine time, but we really need to pay more closely attention to the total time. So I'm going to use a real estate analogy. I use this all the time. We don't want to buy a house and remodel a house if it has a bad foundation. So you don't want to put money into something if you know it's not built well fundamentally. So that kind of plays into total time. So total time is going to trump engine time all day long. You can overhaul an engine, it resets the clock back to zero. Airframe time is what it is, and it's never going down. You can't roll the clock back on that. So something to consider. VREF publishes average airframe times. So they do the calculations. And let's say you have a 1978 Cessna 182. VREF will have listed the average total time for this year model Cessna 182. So that's a good tool in determining, what the average is. And you can reach out to us if you need help in that regard for determining, is this airplane high time? I will say, as time goes by, new manufacturers are not keeping up with demand of aircraft. So 10 to 15 years ago, let's say back to a Cessna 182, just a good, reliable, well-rounded first airplane. 1978, probably around 3,000 hours was an average airframe time 15 years ago. And a lot of people still think, that's where the number is. But in reality, that was 15 years ago. Now those airplanes on average, you're probably looking at 4,000 to 5,000 hours is where the average on those is going to fall. So airplanes are getting older, the times are coming up. So it's constant variable that keeps getting adjusted. Just keep that in mind as you're, thinking about, is this a high time airframe versus not? There's a couple of advantages to buying a high time engine. If it's a new airplane to you, maybe it's turbocharged, maybe you're just not familiar with high performance complex airplanes, flying it on the old engine that that you're going to overhaul is an advantage in my opinion, because you get to learn how to fly the airplane. Maybe make some mistakes, maybe run it a little bit too hot. You get to learn how to not shock cool it, high performance airplane. You can't just pull the power back and push the nose over and expect to slow down and not damage anything. So you really got to work the power back slowly. That way you keep the temperatures coming down evenly and you don't shock cool the airplane. So really, it's wise if you don't have time in that type of airplane to learn how to fly it on the old engine. Once you're familiar with it, once you feel like you've got the hang of it and you can comfortably fly the airplane and manage the engine, maybe that's when you overhaul it. And then you start fresh and you've got a new engine, you know how to run it. My personal airplane, I overhauled the engine as soon as I bought it. I sleep peacefully at night knowing the engine's under warranty. It's low time. I'm the only person that's flown it. So a lot of advantages there. Like Alex mentioned, banks can often roll in the price of an engine into the note, so you can finance that portion of it as well. And it's not as daunting as you think. The maintenance shop that you choose to remove the engine and install the engine is really key in that relationship. It can make or break your experience with overhauling an engine. We do about 30 to 40 engine overhauls a year at AirMart, so it's something we're very, very familiar with. If you want to reach out to us and have more questions, we're happy to answer those questions on the process and how things work. So moving on, avionics are obviously a huge topic of discussion these days. So in reality, you're only going to get 50% rate of return dollar-wise on any avionics upgrades. That's kind of always been that way in the industry. And the reason being is avionics are very labor intensive. So, you know, the GTN 750 might be $13,000, but it's going to run you about another $13,000 to get it installed. So, you know, that's a cost that you're not going to recoup just because it's a labor cost. And that's where most of that comes from. So as you can see on the screen here, we've got a couple, you know, common avionics upgrades listed there. The one thing to factor into this is we would say definitely do it at the beginning of your ownership. Just get it out of the way early. That way you can utilize the upgrades and, you know, take advantage of that. And then while there's only a 50% dollar return on these upgrades, you have to ask yourself what the safety factors are in your flying and how you're going to be flying the airplane. You know, if you're always flying hard IMC, all weather conditions, you know, it might be really nice to have a glass panel with some redundancy as far as AHRS and, you know, a standby G5 or GI 275. That way, if anything ever did happen to the PFD, you've got an electronic backup. Same goes with the autopilots. You know, most of these autopilots we have listed now are fully digital, very, very capable autopilots like we've never seen before. They have ESP, so envelope and stability protection. So let's say you get the airplane in an unusual attitude because you got disoriented in the clouds, it's automatically going to engage the autopilot, level the wings, and put you in kind of a straight and level mode. So you got to ask yourself, you know, what is that safety worth to me and my family if I'm going to be operating this with people I care about on board? So there's more to think about than just the dollar amount there. Some common airframe modifications, for example, you know, tip tanks are a great upgrade that we see a lot of. So commonly, you know, it's on an A36, a 206, a Cessna 210. In all of those applications, it's going to give you more usable fuel. It's going to give you a gross weight increase most of the time, and just make the airplane so much more capable. A lot of times on Bonanzas, I get people that say they don't like the tip tanks. They just don't like the look. You know, everybody has their own opinion, but it makes the airplane so much more capable as far as range and endurance and how much you can carry. Because with the DeShannon 20 gallons, same with the Osborne 20 gallons, that's going to be 20 gallons a side. So it's going to give you 40 gallons total. And both of those give you a 400-pound gross weight increase on that airframe. So sure, you're not going to fly for 6 or 7 hours. I understand that, and burn out 114 gallons of fuel. But let's say you're flying by yourself. You're in Florida. Gas is cheap. It's, you know, $3.99 a gallon in Central Florida. Top that thing off and fly home, because you can tanker the fuel home. Might be $6.50 at your home airport, and you just save some money because you bought a whole lot of gas because you could at a cheaper airport. So something to consider there. Some other common upgrades that you'll see, you know, 30 to 50% return on these, but these are also not super expensive upgrades. You know, VGs, gaming injectors, DeShannon cooling kits on Bonanzas, speed brakes. TKS is the outlier there. TKS de-ice systems is what we're talking about. They're very expensive to install on most airframes. So you can expect about 50% return on any de-ice system that you would put on the airplane. Getting into cosmetic upgrades, you know, assuming the aircraft is priced accordingly for the paint condition, you get about 50% back on any type of paint job that you would do. But you're also buying the airplane at a discount, at least you should be, because the paint condition is less than average. So painting typically takes 6 to 8 weeks once you actually get into a paint shop. Most paint shops do have a pretty lengthy lead time, at least the good ones do. And we always recommend going to a good one because it can really make or break your experience. And it's something that you don't want to do twice. You want to pay for it the first time, get it right, and make sure that the maintenance shop paint facility is going to do a good job, and it's going to be the quality that you expect. So some advantages to that are, obvious. You get to pick your colors, you can customize the airplane. You can pick your N number and really just make it your own airplane, right? So I tell people, don't shop for an airplane based on color, because that's really not what matters in the grand scheme of things. There's so many more factors to consider. Buy a good bone, solid airplane that's going to do what you need it to do. We'll worry about the color of the paint later down the road. That's not the important part. So any aircraft that's going to be painted in the last 5 years, they're going to factor that into the purchase price. So you're going to pay a premium for that. Everything kind of has an intrinsic value, whether somebody else paints it or you buy it with lesser paint and then you paint it yourself. Typically, you pretty much end up in the same place. Moving on to interior, kind of the same thing here, with the exception that it's all about the perception of your passengers. This plays into the exterior paint as well. If you're taking some people with you that aren't used to flying general aviation, maybe they're not familiar with how everything works and they're a little skeptical of it, given the news these days. Nice paint, nice interior really makes them feel at home, gives them a sense of safety. Even as pilots, we know it has no merit on how safe the flight is, but it makes the passengers feel better, when they're sitting in a nice interior and the plane looks good on the ramp. Same here, typically about 50%, depending on, what you do. Really, the sky's the limit when it comes to aircraft interiors. You can go all out and do as much as you want to. Same with the paint. As far as the lead time goes, most interior shops can turn around a full interior 6 to 8 weeks on the high side. Again, there's some lead times to get in there, but once you actually get the airplane to them, 6 to 8 weeks is where most people run. So benefits are pretty obvious. Same with the paint. You get to pick your color, pick your style, and really make it your own airplane and give you that sense of ownership and that pride of, seeing it on the ramp and saying, hey, that's my airplane, right? Because at the end of the day, we don't want to buy an airplane that we don't feel good about or that we don't want to show off. It's a large investment, so you want to feel good about your purchase and feel like it's yours, right? So we'll talk about some myths that are just common misconceptions, in the industry and how they can not be true. So one-owner airplanes somehow have gotten the stereotype that they are the cream of the crop and everybody needs to go buy a one-owner airplane. At AirMart, we buy about 100 airplanes a year. We sell north of 200 airplanes a year. So we are out there buying airplanes, doing pre-buys ourselves. And we can tell you from numerous experiences, one-owner airplanes are not what they've been chalked up to. Now, there are very experienced owners that have maintained the airplane exceptionally well, and it is truly the definition of a one-owner airplane. Most of the time, that's not the case. Owners get complacent. The mechanics get complacent. It rolls into the shop and the mechanic says, I've done the last 15 annuals on this thing. It's clean, it's easy, and he doesn't give it the attention that he probably should. So multiple owner airplanes means multiple mechanics, multiple different locations, typically multiple title searches. So maybe that owner forgot to pay a mechanic 20 years ago and the title has never been searched in the last 20 years. And that mechanic put a lien on the airplane that the owner didn't know about. And now 20 years has passed and nobody can get a hold of that mechanic anymore. Obviously, these are kind of nightmarish scenarios, but they do happen. So that's stuff that working with a title company, you're going to catch on the front side as soon as they open escrow. A lot of times they can rectify that, but it might take a week. It might take 6 weeks. There's a huge variance there as far as that goes. So one-owner airplanes, just do your homework, do the due diligence. Don't say, oh, it's a one-owner airplane, I don't need to do a pre-buy. It's going to be perfect, because that's not always the case. So second myth that we hear a lot, and this is a huge talk in general aviation these days, are compression numbers. Stepping into aircraft ownership, it's something you're going to get very, very familiar with. Compressions are an art. They are not a science. I have seen numerous pre-buys, numerous annuals, where one mechanic will take compressions on an engine, A second mechanic, 5 minutes later, will take a compression on the same cylinder with the same equipment and get a different number. There's a human element to it. There's a temperature element to it. You can read the logbooks and you can look at compressions, and year after year, the number one cylinder will go up, then it will go down, then it will come back up, then it will go down. It's not a linear trend, and it really depends on who's doing the compressions, what the variables were that day. And there's just so many variables that go into it. So the big thing are trends, right? If you have a cylinder that last year was at 74, this year it's at 68, or well, let's walk that back. So 4 years ago, it was at 78, and then it goes down 4 to 6 PSI every single year. And it's just a constant downward trend. That's a good indication that, you might be putting a cylinder on that engine eventually. But some other things to do other than just compressions, because they go up and down, is a good bore scope. It's going to let you see the exhaust valves. So they can get burnt. They can have some hot spots on them, meaning they don't close all the way. And maybe that's the reason that a compression is low. There's also, we see this very commonly, people will run their airplanes too rich. So you get a little bit of carbon buildup on the valves. The valve isn't closing all the way. There's a lower compression because of that. So what you can do is stake the valve, basically try to knock the carbon off of it to get it to seat better and seal better. Most of the time that'll fix it. Continental actually publishes that if you do compressions and you get a 0 out of 80, go fly the airplane for an hour and then recheck the compressions. So same idea there, knocking the carbon off the valve to get it to seat better. Pitting, every aircraft engine is going to have some pitting in the cylinders eventually. I saw there was a 2023 Cessna 182. They flew it 400 hours in a year. It had some pitting in the cylinders, and it was not in a corrosive environment. So this is kind of normal. It's steel cylinders. Of course, it's going to be susceptible to a little bit of corrosion. Really consult with an experienced mechanic, whether it's acceptable level or not. Most of the time it is an acceptable level, and this is just a normal thing. Occasionally you'll see it, very bad pitting on the cylinder walls to where it's damaging the walls and the piston rings, and that's when it really becomes a problem. So a good thing to do, if you have a low compression is try to figure out where the air is going to, whether it's the intake valve, the exhaust valve, or leaking around the cylinder itself. Last one is that, hanger rash, you hear that all the time, or wing removals are damage history. And that's really not the truth. PC-12s in particular, every 10 years, the wings come off. That's a normal maintenance procedure spelled out by Pilatus that you have to do every 10 years. Same with Diamond. You remove the wings, inspect the structure, put them back on. Some planes, they get shipped across the ocean. It's easier to ship them than it is to fly them most of the time. So they'll take the wings off, take the tail off, put it in a crate, ship it to wherever it's going, or ship it back to the States, and then, reassemble the airplane here. That's not considered damage. That's just maintenance and part of it. So hanger rash typically is not considered damage. It depends on, how the logbook entry reads and what it was. But a lot of times, for example, I have a customer, his wife was loading her bags into the airplane, turned around and grabbed a suitcase and dinged the flap. He was the owner. That did not sit well with him. The mechanic said it's not airworthy. There's no issues with it. He said, but it has a blemish on it, and I'm not okay with, having blemishes on my airplane because the rest of the airplane is perfect. So he pulled the flap off. He had it reskinned, repainted. That's really just more of a picky cosmetic thing. That's not damage history. It didn't need to be repaired, but it was just his personal preference to repair it and, make it look right. So not all hanger rash is damage history. I get that question a lot. So that kind of concludes my portion of this. Here's our contact information for both AirMart and AGL. So you guys can find us obviously at airmart.com and Aircraft Cash. We've got the phone numbers there. Like I said, sales at AirMart. If you have any questions that didn't get answered in this webinar, we're always happy to help, or call us at that number. So I think at this point, we'll open it up for questions. I think Kendall will oversee that. So if you want to take it from here.
Alrighty, so we'll start with some that are in the chat. I think Alex, these will be both directed towards you. Do you need a PPL or IFR rating for a loan?
Sure. So this is a great question, and I also feel like this is one of those myths out there in the lending world. Out of all of our banking partners, we only have one bank that requires a pilot license. And I will be honest, you can be a student pilot. That's good enough to qualify for the lending. But the majority of banks out there do not require proof of pilot license for financing. So if you're using a crew pilot, not really an issue. If you're learning how to fly and you haven't just gotten the student rating yet, also not a problem. But generally speaking, most banks do not ask for it. But that's a great question because get asked that pretty frequently.
Perfect. Okay, and the next one, do you need specific airplane info to get an insurance quote, or can you get a quote, but just the type?
Sure. So the insurance quotes generally you can send through a general airplane. So if you have a ballpark of what you're looking at, they can go ahead and run that insurance quote for you and get you a rough idea of what the premium will look like. Obviously, once you find the actual airplane you want, they'll firm up the numbers for you. But yes, you can get a ballpark from the insurance.
Perfect. Okay, we got a couple more. Tate, looks like these are for you. Is it better to look for something years like in the 90s, 2000s? What's the difference versus like a 1960s plane? Better
Ooh,
rate terms on loans.
that's a loaded question. I'll start with that last one. A lot of banks do have cutoffs on, how old of an aircraft they will lend on. So Alex can help in that regard. If you guys have specific questions, reach out to AGL on those airplanes. But really, airplanes do change over time. If you look at a 1970 182 versus a 2024 182, they made plenty of changes, both airframe and engine, interior. Ergonomics got a lot better as time went on. A lot of airplanes got a gross weight increase over time. So it really depends on what airframe we're talking about. And ultimately what that question comes down to is what's your budget, right? Like how much money do you want to spend? Because 182s, they've been making them since 1956. So you can buy a 182 for $70,000, or you can go buy a new one for $800,000. So really just depends, how much you're looking to spend. And you can kind of adjust from there on, what airplanes might fit this category. And then from there, it's personal preference.
Perfect. And then what about experimental or building an aircraft such as VANs? Can you explain how and if you finance these?
Sure. So the experimental and vans, not an issue. If you're buying one of the more popular vans aircraft out there, you'll actually be at standard rate and terms, just as if you were buying a Cessna or a Piper. Now, of course, the more experimental ones are home built aircraft. The rate is usually a bit higher on those. So if you have one that you're looking at, send us over the spec sheet or the sales listing for it. We can get you a quote. Because sometimes it does depend on the make and model, but financing is generally available for those, and the vans are pretty easy.
Perfect. And then Tate, let's see. Can you take us through the purchase process overall? Loan, insurance, find a mechanic, plane, offer, test flight, pre-buy, etc.
Yeah, I'll just touch on that very broadly. So,
Yeah.
like we said in this, first step is obviously decide you want to buy an airplane. But from there, I would suggest getting a finance approval to, if you are financing, see what you can afford. From there, kind of get that 80-20 rule of what you're looking for, what airplanes might fit your mission. If you need help on that, give us a call. We do that all day long. But once you have that narrowed down to specific makes and models, then you can break it down even further and start looking at specific airplanes. So let's say you identify a Cessna 182 that you want to go after. Depending on how close it is geographically to you, a lot of times I'll recommend reading the logbooks, looking at the pictures, doing a FaceTime showing. to make sure it's something that you want to pursue. And then really what I encourage as the next step is to put a purchase agreement on it, come to an agreement. Our purchase agreements really work as just a first right of refusal. So it's going to give you time to fly from Seattle to Kentucky to see the airplane without the threat of somebody else buying it, because it is a very active market. So get the purchase agreement in place, come see the airplane, put your eyes on it, fly it, make sure you're happy with it. At that point, then you would move to an inspection. We can help you find a mechanic that's local to the airplane. It is kind of industry standard to move the airplane around regionally. We're talking less than an hour flight, but most sellers might give you some pushback on that. So it's really best to find a local mechanic that's going to do an objective third-party inspection for you. We always encourage pre-buy inspections, except under very certain circumstances. That way you're just comfortable with it. You know what you're getting and what to expect. So after the pre-buy, it's really as simple as just wrapping up the transaction. Obviously, there's going to be some loan docs there with the bank, but the title and escrow company, they make it very simple. Everything is e-sign, everything is done remote. And at that point, it's just a matter of getting a few documents into escrow, getting the funds into escrow. We'll close. It's your airplane, and then we work through the logistics of picking up the airplane, getting checked out with a flight instructor, and then getting the airplane home to you. So hopefully that was a very broad overview of just quickly how the process works. Give me a call tomorrow if you want to talk about it further. I'd be happy to dive into it.
Good deal. And then Alex, do you want to touch on holdbacks for overhauls?
Yes, I got a really, really good question from one of the attendees regarding how do holdbacks and upgrades work when you package them with a loan. So this pretty much applies to anything you package in, whether that's going to be engine overhauls, avionics, interior paint. And I want to preface this with the banks, generally speaking, only will finance stuff that adds value to the airplane. So if you need new brakes, new tires, or just general repairs, they're probably not going to finance it. But if you're doing a new overhaul or any upgrades, those are all eligible. Now, the first answer is the easy answer. On a refinance transaction, meaning if you already own the airplane, those can be pretty simple because you already have equity in the airplane, you've owned it for a while. And the question was related to if I don't quite know what my quote is, how do I know how much to apply for the overhaul loan? And the reality of it is, if it's a refinance, I always tell people put a cushion in it. So, if your mechanic's telling you 40K, you can pad that, you can get a cash out. And then if you still have, let's say it comes in on par or comes in cheaper, you can always have leftover funds in that escrow account. They'll return them to you, and you can apply that to the loan as a principal adjustment. So in a refinance, it's pretty easy. You can pad it usually as long as you got the value in the airplane. And just for reference purpose, the banks will actually base the loan off of the future value of the airplane, including the upgrades. So that's going to be kind of your basis for the loan value. Now, on purchases, it's a little harder to pad it because on purchases, the banks will base the loan off of the lower of the total purchase price, would be your aircraft plus your quotes, or the future value of the airplane. So they're going to base your loan off of whichever of those is lower. So if there is some wiggle room, you can pad those sometimes. But obviously, if there are any extra costs that come up after the loan closes, at that point, usually it is just the responsibility of the owner to cover those costs. But of course, if you do come in, under and you got some extra money left in the holdback and all the work's finished, it's your money. The cash is returned to you, and I generally just recommend apply it towards loan to save you some on interest. So great question on that one. It's if you have a specific scenario, it's probably best to call me. We can discuss it specifically. But there are pretty popular options to do with the loans.
Okay, Alex, this is for you also. Outside of obtaining a pre-approval, is there a rule of thumb or guidelines a buyer can use to get an idea of an expected pre-approval amount?
Sure. So this is a very frequent question as well. And a lot of folks will come and they'll say, Alex, I don't know what my budget is. I don't know how much I can afford. Let me send you my financials and just tell me the maximum loan amount I can get. And it's kind of hard to back into that with the bank. The reason being is partly the operational costs. Maybe we can approve you for a $500,000 Piper, but we can't approve you for, a $500,000 old King Air. So two different types of airplanes there and two different underwritings. So usually in those scenarios, I ask folks, I say, first thing back into your mission, you're looking for piston, turboprop, single engine, multi-engine. Try to figure that out first. Once we have that, AGL can review your financials and give you a kind of a preliminary opinion before we really do a firm credit pull and send it off to underwriting. And just say, hey, based on this, you'll probably be somewhere in the range from X to Y. And then we can kind of do that. But for the banks, we do have to pick a number. We have to sell them, tell the bank, Mr. Prospect is applying for $400,000 loan. So we do have to give them a number. But the good thing is, though, I'll say this much: if you get approved for 400,000 and a month later you find the airplane of your dreams and it's a little above that, we can always get the loan increased. So there's some flexibility too.
Perfect. And then let's see. Does the age of the aircraft matter in regards to interest rate and terms of the loan? And then how would refinancing work in the case that aircraft was purchased with cash?
Sure, good question. So the age, this one is kind of on a case-by-case basis. We have some lenders who do not have an age restriction. As long as the airplane's airworthy and they're happy with the collateral, they'll finance it. And some of those lenders will actually give you a really good rate for it too, which is pretty awesome. But we also have some lenders who actually specialize in vintages and warbirds and those types of products. So if it is a more unique older collateral, we'll get a case-by-case quote on that. But if you're looking on 182 or something, you should be fine. You'll get a great rate. So age, generally not a restricting issue, but on case-by-case may impact your interest rate and your terms. Regarding the refi, those are pretty much the same as a purchase. Rates are not usually any different. The terms are usually not any different. The only saving grace is we don't have to worry about a seller trying to close or anything of that sort. So yes, if you buy in cash and you want to do a refinance reimbursement after the cash purchase, not an issue at all. Usually speaking, it's same rate and terms you'd find on a normal transaction.
Perfect. Okay, Tate, do you represent buyers in a third-party transaction for aircraft that are not in inventory at AirMart?
We do. So it's a very case-by-case basis and, kind of what services you're looking for. So, without knowing the exact situation, I can't dive into that too deeply, but reach out to us tomorrow if you're in that situation and we'll be happy to help you.
Perfect. All righty. All great questions. I think we covered all of these in the chat. And since we are a little after 8 o'clock, I think we'll go ahead and wrap it there. Oh, Alex, you have one more?
Yes, one more just came in, and it's a quick one. Attendee asked, what is the FICO range, the credit score range for aircraft lending? And no, I wouldn't say this one so much like a mortgage. Majority of the aircraft lenders out there like to see approximately a 700 or higher. There is some wiggle room in there. We do have one lender who actually does not have a minimum credit score. So in theory, if your financials qualified and everything else qualified, potentially you could get approved with lower credit score. But I'd say on average, 700 is a good ballpark. So
good deal. All righty. Well, thank you all for joining us. As a reminder, like Alex mentioned earlier, we will be at Sun and Fun next week. So come see us if you'll be there. And then later this summer, we will be at Oshkosh. So if anyone has any more questions or anything, probably the easiest way, just visit us at airmart.com or aircraftcash.com, and we can help you any way we can. Thanks, guys. We appreciate you all joining us tonight. Have a good one.
Thank you, everyone.
Bye, guys.